Has the crypto rotation begun, and what is the market going to do after Trump's pivot? Well, we're going to break all that down for you today. And I do want to thank our sponsor, and that is Coinbase. Did you guys know you can now trade stocks around the clock over on Coinbase, along with crypto and all sorts of tools that are built now for you to get into the market. Very easy to set up. Also, zero commissions right now, 24/5 access on this new platform, and zero commission trading. So this is the place for you guys to get into it. You can earn up to $2,000 when you buy $50 in crypto. If you want to get into Coinbase for the first time, use our link down below to get started. Let's, of course, just bring in our guest today, and that is Mr. Matt Hougan, coming in from Bitwise. How are you?
I'm doing well, Paul. How are you?
Nice to see you. Excellent is the day. I go to bed yesterday early thinking it was going to be a nice little somber evening, and then Trump, throws the gauntlet down with the banks. I don't know. It's crazy. You put out a statement, though, the weekend that changed finance. This was a good article if you guys didn't get a chance to read it. Give me your position here, because I'm kind of on the fence on this one. What happened, why you think this really starts to change capital markets in general.
Yeah, so what happened, thanks for calling out the article. What happened is at 2:30 a.m. on Sunday, as we know, President Trump announced that we were bombing Iran and started major combat operations over there. And the point of the article was 2:30 a.m. is a very odd time in financial markets. The U.S. stock market is closed. The U.S. futures market is closed. Yeah. Asia is closed. Europe is closed. The only thing that's open are a few small Middle Eastern stock markets. Mm-hmm. And what we saw was that traders turned to DeFi and specifically to Hyperliquid to trade not just crypto, but to trade oil, to trade gold, to trade other assets. And the point I was making is this opens a massive door. If you're a macro hedge fund, if you're an international trader, and you saw that your peers were able to position immediately in response to the developments in Iran, while you were not, you're in trouble, right? So you're going to have to create a stablecoin wallet. You're going to have to fund that wallet. You're going to have to learn how to trade on Hyperliquid. I've seen this before. If you go back to the global financial crisis in 2008, that was the first moment where bond ETFs really shined, because traditional mutual funds couldn't process redemptions because the prices were crazy. But bond ETFs traded just like they were supposed to. They became the focus. And the next year, ETF volumes went up 40%. And the next year, they got above $1 trillion. And today, they're $30 trillion. Sometimes you need this crisis to force people to do a new rail. But once they do it, they don't come back. So I do think it was a big moment for crypto.
Well, and to your point, some people would argue, well, there's two things I want to hit on. One, of course, is though Hyperliquid was, I think, a big catalyst here, also you have to think about it from the stance of prediction markets, because Polymarket equally had access into where you could be making a lot of plays in that route, which is the other area that's growing pretty rampantly right now in crypto in general. But when you look at this, and people would, I think, would argue in the traditional markets, well, wait, Matt, these markets might still be unstable, but maybe now we have analysts that have a chance to review the data or review the information, and maybe that liquidity that exchanged hands really didn't matter on Monday morning when the markets opened. How would you argue against that if somebody was saying, well, traditional markets still have that buffer zone?
Yeah, well, that's exactly how innovation happens. It's absolutely true that Hyperliquid is not as well established, secure, et cetera, as CME, and people are taking additional risks trading there. And the point I was making is you have to have an extraordinary situation to make you take those risks. Mm-hmm. But that's what we saw this weekend. And for the hedge fund that's looking to protect its P&L, it's just an easy choice. Would you rather be able to react, or would you rather not be able to react? 100 times out of 100, they will choose being able to react. And I've just heard it from TradFi for too long. People don't want to trade 24/7. You're right, except for when they have to. Mm-hmm. And this was an example of they had to. And once you open that door a little bit, then you start exploring these things. Then you're through the infrastructure. Then you're onboarded. So they can think what they want, but you can't put the genie back.
Do you think this is a long-term process to get this done? Or do you think this is something, especially with clarity maybe on the verge of going through it in the next few months, that this could pivot really quickly for the markets and we could see this maybe in 6 months?
Really great question. Look, I think it's an exponential growth curve. And the thing about exponential growth curves is that you don't really notice them at first. So what did Hyperliquid do on oil volumes, $500 million or something? That's like a drop in the bucket. But the next time when all these hedge funds are on board, they'll do maybe $5 billion in volume. And then the next, that's what we're going to see. So it's not like we're going to wake up and it's all going to be Hyperliquid. It's not going to be CME. It's just, you've started this again. I'll go back to my ETF example and the great global financial crisis. ETFs still aren't as big as mutual funds, but boy, are they hunting them down. And that was the catalyst that like put them on that growth path, right?
Yeah, step function is definitely the key here. When you look at the issue right now around private markets, and I want to showcase a tweet you put out. I wonder if the real risk of AI disruption for most investors is that public companies are being disrupted by private companies. So you look at that, then you can look at pre-stocks over here. There's Palmer Luckey and Anduril. There's Anthropic, Kalshi, and so on. I mean, these are private companies right now out there trading on pre-stocks. What do you think this is going to look like in terms of exposure? What should someone have in terms of exposure on something like this?
Yeah, the answer is not zero, right? The point I was making is that, look, I think AI is going to be great for the economy. I think it's going to catalyze growth. I think the global economy will be bigger as a result of AI. But if you're only in the public markets, you may only feel half of that. You may only feel disruption. If we make an analogy to like the internet, Amazon was public and you could invest in how it was disrupting traditional retail. But imagine it wasn't public and all you could own was Sears and Kohl's, et cetera. You didn't benefit from that upside. That would have been a real loss. So I think the answer is not zero. Most people have zero exposure because it's expensive, it's hard, it's not as liquid, it's not as easy to access. But I think there's a case to be made that the quantity of growth is so large that many people should think about overcoming those hurdles to get some exposure, at least not be on zero. I do think that's a real risk.
Well, okay, zero is not a good number, Matt. So what is that, 2, 5, 3?
Sure, yeah, 5. 5 is not an unreasonable number. I think that, but the thing is that 99.9% of investors are at zero. Right. True. This is almost like crypto 5 years ago, pre-ETF. Everyone was at zero, and you were like, please, Lord, get to 1. And now it's like get to 5. I think it's the same thing on private markets. Basically, everyone is at zero because it's complex, it's confusing, et cetera. Maybe zero is the wrong number when you have a disruption the size and scale of AI. So is it 5%? That would be a great starting point.
I like it. Let's talk about boomers. Maybe they're back. Here's Eric over at Bloomberg. He's talking about another solid inflow day on Bitcoin ETFs. Now, amazing considering it's down 22 on the year, 50 total on the decline. Crypto Twitter, call your parents, tell them thank you. I love it. Eric's always got he's got some good takes on that. Are they back? Do you think they're back? Are they coming in now back to the Bitcoin ETFs?
Yeah, I think they almost never left. The thing about Bitcoin ETFs is there are really 3 investors. There's hedge funds running the basis trade. There are attention investors who go to the spotty, shiny thing. And then there are long-term allocators. I actually think the long-term allocators were accumulating even while we saw inflows. It's just the basis trade disappeared and everyone was chasing gold or AI stocks. Right. I think what we're seeing here is the basis trade is coming back again. The attention is focusing maybe again on crypto. So those are not papering over the long-term accumulation. But I mean, the boomers are why Bitcoin is not down 75%. It would be down much worse if they weren't here. But I do think you'll start to see flows pick up from here.
Well, you also had, I think the big news of the day was Trump pivoting and slamming the banks now over the stablecoin dispute. He has blasted them pretty heavily. And then, of course, I don't know if you can credit this or what's going on in Iran and a flight to safety, both on gold, even though we did see gold retrace down and Bitcoin move up, kind of a rotation of assets right there. Bitcoin trading, as we're recording, hovering around the 73 to 74K range, up considerably. Do you think that was the reason we're starting to see market movement, is that Trump finally picked a side?
Yeah, I think it was. I think it was one of the reasons. I think there are some other reasons going back in time, but it was the latest catalyst, and it's really significant. I mean, his post on Truth Social was amazing.
Huge.
It was like he had two kids that were fighting, and he told the big one to stop picking on the little one and let it have a fair take. I do think that was a catalyst. You saw the Clarity Act odds on Polymarket jump from 62 to 78%. Obviously, the Clarity Act is really important to the long-term growth of crypto. And if you look underneath the surface, right, last I looked, ETH was up like a little bit more than Bitcoin. That's saying there's some news there. So I think that was an extraordinary statement and extraordinarily positive for crypto. And yeah, it's why we're up, 7-8% today.
Yeah. I'm looking at a tweet we put out from the network here. Poll: Trump declares war on banks. The bottom is in. So here's the question. Yes, Clarity is the bottom signal, or no, we get one more drop. What would you select there?
If I had to pick, I guess I would pick Clarity as the bottom signal.
Okay.
That doesn't mean I think we go straight up from here. It just means that I don't think we broach 60 again.
Okay.
I think we're in the bottoming phase. Like maybe the local bottom is in. But could we pull back? Of course we could pull back.
Yeah.
But look, I have every confidence that we're going higher, over the next 12 months.
Well, you like that. I mean, I think the fact that this is it's closer than I think a lot of people. We only had 200 votes in this one, but still, this will probably run a little bit before it pans. I'm going to let them see how that pans out tomorrow, because that'll be something to go back and look at. Hey, I want to play a clip from Tom Lee because he thinks there's been a little bit of a change in the market. I want to get your opinion. Take a look.
I don't think anyone can say we're bottomed yet, but this is what looks like the makings of a bottom, right? That you get bad news and the markets are taking it in stride. And more importantly, I think we've had a position reset. And so on the other side of this, I think is going to be a lot of opportunity.
What would give you the confidence to say, that's a sign of a bottom? What do you need to see?
Another sign would be we get another scary headline and gold continues to sell off, and then stocks actually turn green on the day, because that means we've washed things out. I think we're pretty close.
All right, so there's, again, back to the rotation, that Tom is kind of hitting on. Gold selling off, which we saw on the charts, some stocks moving. Now we've got Bitcoin moving. Then you jump over here to Ted. He's talking about these war-related moves. Russia-Ukraine war started, Bitcoin pumped almost 40. After that, it dumped, 67. Now here we are, Iran. Bitcoin could pump towards 78, 80. Some people kind of pointing in that direction. We had Gareth on last week. He was kind of going that direction. But we could see a downtrend after that. So maybe to your point, but you don't think 60 or below 60 is in the cards?
It's not my base case, no. Again, I think we could pull back, but there's just too much cumulative positive news. And I would build on something Tom said, actually, to tweak it a little bit. One of my favorite tells of whether we're in a bear market or a bull market is how we react to good news. In a bear market, we ignore good news, right? Yeah. When Apollo bought Morpho's token, it went up and came right back down. When BlackRock bought Uni's token, came up, went right back down.
Yeah.
Today, when we have good news, like Trump posting something positive on crypto, we just rip. So we're rewarding good news. And that is a real change in investor psychology that you don't usually see during during the depths of crypto winter. So again,
for sure.
Would it go back down into the 60s? Of course. But do I think we're starting to bottom and trend higher? I absolutely think we do.
Yeah. ADP February data came in, it beat. That looks like the non-farm payrolls might prove out, but it could be bad news for rate cuts in general with rate cut odds. I mean, you don't anticipate a rate cut right now coming in next on the next FOMC?
Maybe not on the next one. I think the world is looking to a Warsh rate cut regime. Yeah. One thing that I would note, there are all these concerns about jobs and inflation from what's happening in Iran. But if you look out at like what the CME is forecasting for rate cuts in December, they haven't changed over the last month. Yeah. The dominant paradigm here is AI as a deflationary force, and the administration wants lower rates, and I think it will get lower rates. Maybe that changes if oil like spikes to 150, but that's not the base case that most people are operating in right now. So yeah, not next month, but over time, we're going to get lower rates this year. It's going to be positive for risk assets.
Are you anticipating some kind of crazy move on oil like that? I mean, we're edging up to $100 a barrel now.
Yeah, I'm just saying that there's risk. I'm not a geopolitical expert, but Iran sits at the Straits of Hormuz. They have the drones that could damage oil infrastructure. You can get local spikes for sure. So I think anyone who rules that out of the realm of possibility is just being, too easy on themselves.
Yeah.
It's a crazy world out there.
Yeah, for sure. Well, and I think this lines up with our next clip here, because Arthur Hayes kind of mentioned this in his assessment of how, and if the Fed could make action here, this might be the reason why. Take a look.
The longer this goes, and I think the next Fed meeting is in middle of March, the more likely it is that the Fed is going to have to respond with printed money because, people start selling equities, oil prices spike. If Trump decides he wants to send ground troops into Iran for whatever reason, whatever objective he claims he's going to give those troops, that's going to require a lot of money and a lot of borrowing. And so the Fed will have to finance the government. That is their job. If you look at this chart, there's been Republican presidents and Democratic presidents. Every single one of them has done the same thing. They've attacked the Middle East. They will do what's necessary, print the money so that the government can spend it to, finance this war. Am I buying anything right now? No. I'm waiting for that press conference from Jerome Powell saying, due to unforeseen events in the Middle East, or whatever euphemistic term they want to use for why they're financing the war effort on behalf of Trump.
All right, so there you see it. I mean, that's the counter argument of it would take, a major event in the Middle East to put pressure on the Fed, regardless of what we're seeing with jobs and inflation, because this would require wartime Fed reaction, which is a bit different. But to your point, we could see the spike in oil that could cause those kind of moves for sure.
It definitely could cause it. The economy could face challenges and they'd want to respond to that. I also think the broader point that Arthur is making is that in every conflict, the government prints money because conflicts are really expensive, right? In the current limited engagement, I think the forecasts are $200 billion, which is off balance sheet, unexpected spending. It's not like we have a pocket in the Pentagon's budget for a new kinetic war each year, right? That is additional spending. So look, wars lead to money printing, which leads to asset price inflation. It's not the most important thing to think about vis-a-vis a war, but it always happens, and it will happen again here.
Yeah. All right. So one other thing I want to hit on, and that is this right here, Kraken. They become the first digital asset bank that has a reserve master account. Now, I kind of thought it might be someone else, but Kraken is the one. Does this mean that we are going to see just a number of this approving over the next few months? Just boom, boom, boom.
Yeah, I mean, first of all, it's worth noting that this is a massive piece of news, right? People have been trying to get narrow banks even before crypto, and then crypto-related banks with access to the Fed's master account for, decades, and really intensely in crypto for many years. And that door was just completely shut because the regulators didn't want to. First, they didn't like crypto. Then they were worried about unknown risks. This is a really big moment, big deal, a good thing for the world. I suspect, of course, we're going to see everyone follow suit. It's worth noting there's some limitations to the charter that Kraken got. It's provisional in many ways. It's limited in its use. But it means the door is open a little bit, and I suspect the door will open more. So this is, look, every piece of news tells you that traditional finance and crypto are intersecting. It's in Trump's tweet. It's in this Kraken news. It's in announcements from BlackRock. It's in announcements from Apollo. There's just overwhelming evidence that that's going to happen, and that crypto is going to play a really large role as that intersection occurs. So this is just the latest piece of news showing that.
Yeah, and I think your point is good because it does start to really create this windfall that could be coming into the market. And timing is so unique here. You've got clarity lining up. Of course, what's happening in Iran, that's the wild card because you don't necessarily know how that could play out. At least we have a little bit of a trajectory alignment with clarity now, especially after Trump's tweet. I mean, that really kind of changes the dynamic. Do you think the banks fight back on this in any way? I mean, they're sitting on the biggest lobby out there, or do they finally say, all right, we're going to come to the table and we're going to get this complete?
Yeah, I think that's a really interesting question. I don't know the answer, but my base case is that they come to the table and they get this completed.
Okay.
Because
All right.
they're now exposed to like a much worse outcome than they were at the start of this negotiation.
Right.
And so they now have to cover that flank and accept something that at a minimum is where they started is probably the best deal they can get now. And they're now in that defensive position. So I think that will force them to come to the table, but you never know. It's worth monitoring, and I'll be happy when it's actually signed.
Yeah, no kidding. Hey, listen, I'm going to be listening to a lot of these earnings calls as in their next earnings calls, how they massage this, because I've talked to a lot of people that are investing in banks, and just this issue alone, it's the first time they were even aware that all this was going on because they're not crypto people. And it was because Trump drew the line and said, this is what's happening. And all of a sudden you have media hitting on it. And they're like, wait a minute, what's going on with my bank investment over here? These guys are doing what? So interesting. Now you're getting pressure from your stockholders.
I love that point because the banks have spent the last 6 months saying the sky is falling. If we approve stablecoins, our business is over. Yeah. And now we might approve stablecoins. So that story is going to come home to roost for them.
Yeah, it's crazy. Last question to you, altcoins. I'm looking at this right here. Altcoin this season discussion has hit rock bottom on social right now. Historically, this has been a strong buy signal before major altcoins run. Do you think we are going to see a traditional altcoin season out there again, or is that game over?
I think that game is over. I think we'll see a non-traditional altcoin season, by which I mean an altcoin season that rewards assets with real world traction and real world application. But I don't think we'll see the sort of rising tide lifts all buckets where you rotate from Bitcoin to ETH to DeFi to NFT pictures of rocks. I don't think we're going to get to that level of craziness. But do I think the market may re-rate like some DeFi tokens, which are trading at billion-dollar valuations now and have huge businesses? I absolutely think that's true. I just think it will be more differentiated than previous altcoin seasons.
I'm in your camp there on that one, Matt. Speaking of that, we got to talk about the lightning round here. Stablecoin fight is officially over with clarity. Do you think that is the case?
It's not over yet, so I'll have to say I'll say no. It's almost over.
Banks will go for one last push on the Dems since they just lost Trump.
I'm going to say no. I think they're just going to try to negotiate a peace.
Really? Okay. All right. I'm going to go on yes.
I know. Positive take, right?
Yeah, I like that. I'm on the yes camp, just so you guys, I put out the tweet yesterday. I said, it was like Don Corleone.
It's a reasonable take. Maybe I'm just feeling optimistic on a full day.
Keep your enemies close.
It's fair.
As I say, clarity will defeat the final boss, which is Elizabeth Warren, possibly Iran, and the World Liberty Fund incoming.
Well-structured question. Count me as a yes. I think it'll win.
All right, there you go. Clarity wins on that round. I'm with you on that too. Here we go. Let's go with this one right here. 90 days in Congress will send more money to the Iranian war. Here, what do you think?
I mean, yes, they're going to have to send money.
Everybody's going to send money, which means Fed's going to be printing over there. All right, here was a good one. This is Vitalik won last weekend. Ethereum is the ultimate sanctuary tech, is what he's calling this. The hedge against government control, surveillance, wars, AI, corpo slop, and the social media black boxes. He is all in that ETH is the route here.
Yeah. I thought that was a good post. It hit a nerve. Yeah. So yes, I think there are a few people. I think Near also is positioned well in this space. But sure, we'll give it to Vitalik. It was a good post. Vitalik.
V wins that one. What token is BlackRock most likely to buy after Uniswap? We've got Aave and Morpho on the deck.
Yeah, maybe Aave just because Apollo went with Morpho, but Yeah,
I'm with Aave as well. I like them both. I think both are very, very interesting business models. Morpho a little bit more distributed because of their partnerships, but Aave, they could win the DeFi angle pretty quickly and get some movement, especially if institutional comes in, to your point. Here we go. Institutions will not like the uncertainty of the Aave DAO drama, though, every quarter. Do you think they jump in and then go, wait a minute, there's all this DAO drama all the time, I'm out?
I'm a no on this one. I think, look, I think the net of the DAO drama is things are improving for token holders. It's messy and ugly, but that's, I think, what the institution,
which is good. Yeah, which is good. Yeah,
100%.
Definitely there. Let's see, what else do we got here? IPOs are zombies and clarity will be the bullet to the head.
I'll say no. I'll say no on this one.
Yes.
I like the point, but we're going to have some big IPOs in the next year. We're going to get SpaceX. We're going to get those. But I love the point. Netflix right here proves removing uncertainty is about to melt faces. I mean, you look at Netflix, as soon as they're out of the mix on this thing, all of a sudden their stock is just going ballistic, because everybody's like, okay, now we know where we are. Let's go invest. That's a good take. Yeah, I'll go with yes.
Okay, we're in the same boat there. We like yes on Netflix is in. Bitcoin is going into a narrative slumber after gold's rise in quantum threats.
No way. Fake news.
No way. Fake news. Okay, I'm with you. I'm kind of on the side. I'm in the middle there. I feel like this is going to move a little slow, but I like it. Solana is the best hedge on Ethereum right now, moving too slow.
Agreed. Yes.
Okay. Same with me.
Yeah. Steel sharpens steel.
Yeah. Liking it. Kathy Wood converts the ARK fund into a DeFi fault.
Great idea, but no.
She's not going to do it. Who would?
No,
Who would do that?
Idea. Yeah, maybe I should.
I was going to say, I bet Bitwise might do that.
we love the vault structure. We're building there.
Yeah, there you go. Hey, Matt Hougan, always fun chatting with you. Thank you so much for coming in today. We appreciate it.
Thanks for having me, man. This was fun.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.